In a relief for big borrowers, the Supreme Court has directed waiver of compound interest on all loans during the moratorium period. Banks and financial institutions will have to exempt EMIs from March to August 2020 from compound interest and will have to refund or adjust the amount if any penal or compound interest has been collected during that period. The court questioned Centre's rationale to restrict compound interest relief only to loans up to rupees 2 crores. Rejecting requests to extend the loan moratorium period beyond August 2020, the Apex Court ruled that a complete waiver of interest on all loans cannot be granted during the moratorium period to protect the interests of bank depositors and financial health of lending institutions. The top court also allowed RBI and banks to declare bad loan accounts as NPAs while lifting the stay imposed after the end of the moratorium period on 31st of August last year, when banks were restrained from declaring any more accounts as NPAs till further orders. The court held that it will not pass any further orders to Centre and RBI as there is limited scope for judicial review on economic policy decisions which are best left to the Union government and the RBI to decide based on expert opinion. The court noted that as an unprecedented pandemic affected the entire nation, Centre offered various financial packages and took care of public health, jobs and welfare of migrant workers amidst financial constraints. The court refused to ask Centre to announce economic reliefs after losing on revenue collection due to the lockdown, saying that it is not an advisor to the government on financial policy. The court dismissed arguments made by various industries which had sought financial relief from the Union government under the Disaster Management Act, observing that while the Union government had already taken action under the Act, the functions of all ministries cannot be done by the National Disaster Management Authority during a pandemic. The order noted that judges cannot be expected to have economic expertise and should not decide on economic policy even if the petitioners contend that a better policy could be implemented. While Centre had already given a compound interest waiver for loans up to rupees 2 crores, power producers and MSMEs had sought a longer moratorium period and financial aid to tide over the pandemic. Centre had opposed any further relief for big borrowers while submitting that Kamath Committee had already given its recommendations to restructure loans for big borrowers across sectors to provide sector-specific relief. The Union Finance Ministry had earlier informed the court that over rupees 5,002 crores were transferred to various small loan accounts as part of compound interest waiver, while making it clear that pre-COVID defaulters should not be allowed to benefit from the fresh resolution framework. What remains to be seen now is, with the court lifting the stay on classification of NPAs, how many companies are going to go into default and till what extent this is going to affect the banking sector.